G'day everyone, welcome back to Pete's Investing. Today is April 11, 2023. This is the Aussie New Zealand dollar currency update. You can see here on the daily, the 4 hourly and the hourly. We're tracking against the CCI 1500 with a moving average 400. And all three timelines are showing, well, the daily and the 4 hourly are showing bearish signals. And the hourly time frame is broken to the upside, and I'll cover each of these in more detail. I'll just zoom in. So on the daily first, you can see here I've got this key support area at 10471 and a key resistance at 1108, and also got these diagonal ascending and descending trend lines. So at the moment it's stuck in this converging triangular range, and I've also drawn a Fibonacci retracement here between that range there, and you can see there it's broken below the 61%, which is a key level of potential trend change or trend continuation. Now in this case it broke below the 61, and that rise is now broken to the downside, so it's going to continue on a downward momentum in line with the CCI, so hence predominantly short trades. Now looking at the 4 hour chart, same sort of pattern is shown, and again that's showing a bearish signal. And I'll drill down to the hourly chart to give you a bit more clarity on what these minor waves are doing. So on the hourly chart you can see the same pattern. It was predominantly a shorting environment. It had a bit of a false break in that area there, and I've drawn this Fibonacci retracement between that high and that low to see what, if any, action is going to take place from here. So you can see here the current price is currently sitting at the 61% level, or just below it by a couple of pips, but the CCI has broken to the upside in a more bullish movement. I wouldn't be going, so looking at it from the big picture, I wouldn't be going long. I'd probably wait for this to confirm, either to keep breaking to the upside and wait for the 4 hour to also break in a more bullish movement. So we may see it approaching this upper resistance line up on the 4 hour chart or on the daily. If you're going to go long, I'd wait for this 4 hour at least to turn to the upside. Or if you're going to go short, wait for this 61% to pull back at that level from today where we are now. And if it starts declining, we should see this CCI also break to the downside, and that's where you start taking short trades because all three timelines are now in a bearish movement. In terms of a trading idea, I'll go back to, for example, where it started breaking to the downside, and that period there, by the way, corresponds, you can see there, corresponds with that area down there on the 4 hour, and also that area there on the daily. So had we gone short when the CCI was breaking to the downside, as in this area, you can draw in some fractals, and in any one of those areas, let me just drill into some of these. You can see there when it breaks below the fractal, all three timelines are showing a short bearish signal. You would have gone short there and get out with I usually take a small percentage gain. I'd rather small percentage gains rather than very minimal large gains, which can often turn against you. So take short small gains where you can, maybe a short percentage gain or a monetary gain that you're happy with, and then wait for another pullback. You can see there went up, and then wait for the next short position, and another one there. You would have taken another few pips there, another one there, and so on. So that's a continuation of the downtrend when all three timelines are aligned. To understand, and if you have a court going against you, to understand how to properly trade using the average down technique, reference the links in the description below. Subscribe, support us on Patreon, and see you in the next video.